Hi, Daily Coaching and Accountability Partners, David Alpert of Mastery Consulting. And I got a good question from one of you, and I can't remember for the life of me who it was that asked this question recently. David, who might you recommend for me to be my financial advisor? I guess this is somebody that's looking to do something a little more intentional with their money. And I guess my answer was a little bit coy, so I apologize for it. But my answer was me. Oh, not because I'm the expert or the whiz on all things financial. I am not. But because, are you ready? A couple of reasons. Number one, 94% of financial advisors underperform the market. That quote comes from Tony Robbins' book Money, and I don't deny that at all. What do I mean by that? You're paying money to a financial advisor, and incidentally, you're almost always paying them a percentage of the money that they have under their management. So you're paying them money to simply manage your money for you, not to achieve a good result, mind you, but to simply manage your money for you. So you're paying people money to lose money when you could literally just invest in, some kind of index fund that, mirrors the stock market, and you do better than 94% of them. Okay, let's kind of continue on this line. Number one, you don't hire a financial advisor because they cost you money to lose you money. Number two, if you are going to invest your money, what do you invest in? And you basically have three options only. Are you ready? What are the best investments of your money over the last 100 years in the United States of America? Since 1926, number one and number two are almost tied. Yes, number one is real estate. Real estate has had an appreciation of approximately 8% per year over the last 100 years or so. Real estate's terrific. Okay. The second one is stock. It's equity. It's buying stocks in the U.S. stock exchange. Why? Because it's gone up by roughly 8% a year over the last 100 years. So which one should you do? And my question would be very simple. It would be do the one that you know the best. If you know either one of them the best, don't do the one you don't know. Now, if all things are equal, I would tell you real estate over stock. Why? Because I think we screw up stock less. We screw up stock more. Let me explain. Since 1926, the United States stock market back then was at like 50 or 100. Now it's at who knows what, 28,000 or whatever. Could be more when you watch this video, right? Which means it's kind of hard to lose money. And yet 95% of individual investors lost money in the stock market. Why? Because when do individuals buy? Yes, when the market's high. And when do they sell? Yes, when it's low. So we buy at its high, we sell. How do you pull that off when the market's been going up like crazy over the last 100 years? Who's making all the money anyway if the individuals are getting in at the wrong time and getting out at the wrong time? And the answer is simple. All the gigantic pension funds that by law, because they're so large, are required to keep most of their money in those funds and can't withdraw it all at one time. For example, the largest fund in the world is the Teachers Investment, and it's TIAA, right? The Teachers Pension Fund. By law, they can't take out more than a percentage of their funds from the stock markets because it'll cause the stock market to tank. So they're forced to do the right thing and they keep their money in and suffer during the economic downturns and the stock market downturns, but stick around for when it goes back up, right? So it's interesting. The problem with stock, and frankly, the problem with real estate is we get involved and we screw it up, right? You know what I did once? I went in, I took out my 401k, I took it out, paid the penalty, the penalty for taking it out early. I invested it and lost all of it. I can speak from experience. Don't do that kind of thing. The only way we screw up wealth is by getting involved and screwing it up. With real estate, there's a less of a chance of doing it because at least you have to live in the damn thing, if that makes sense, right? We have a good shot with this home because we ain't moving right now, God willing, right? So here we are. My question for you is, which would you invest in? Invest in the one, whichever one you invest in, throw away the keys. Don't touch it. Don't screw it up. Keep the house, long-term appreciations where all the value's at, and then you have something to pass on to your children. Stock appreciation, same thing. If you're going to do stock, the problem is you can get online in 5 seconds on Ameritrade and blow it, if that makes sense. That's the problem with it. Incidentally, most people that tell me they want to trade stocks, they're going to day trade. Yeah. Watch what happens after about 3 months of them losing money because they can't help themselves. It's a drug. You want to get involved and you start losing money. There is a third great investment. I hope you're still watching this video at this point, the 5-minute mark, because there's a third great investment that we miss oftentimes. Investing in your business. interesting, but investing in your business in many cases is better than investing in real estate or the stock market. I'm not saying don't invest in real estate or the stock market. I'm just saying it is a great investment and we miss the benefits of reinvesting in your business. What could the return be in your business if you reinvested a certain dollar amount each month, whether it was for great people to grow your business or for great marketing channels to increase your lead generation and transaction flow? Okay. I jokingly told this person in our daily coaching program, hire me to be your investment advisor. You don't even have to pay me and I'll do you a service. The whole game is to pick and stick when it comes to investing. The long term always works better than the short term. Don't let anybody fool you. There are no shortcuts to building wealth. I wish I could go back. When I was in my 20s, I was living up in the San Francisco Bay Area and I looked at a townhome. And I think the townhome at the time was like 240K. And I was scared at the time, right? I didn't think I was going to stay there for years. I didn't have a family yet to settle down with. I didn't know if I wanted to live there forever. Had I bought the damn thing and done nothing but kept it and rented it out later or paid somebody to rent it out later, I know what the value of the properties are in that particular location. Now everything's well over $1 million. The thing would have been paid off by now or whatever. But I didn't do it. So we need to invest, but we need to pick and stick. We need to stay in those things. I hope this was helpful, this video for you. Business finances at its best here. My question for you today is, what did you learn on this video and what might you do differently going forward?